Perfect. Thanks, Julian. Appreciate it, brother. So what we're looking for, guys, is the fourth point being these support lines. Okay, these green support lines. All of this is going to be color coordinated. If you can remember green, call, red, put, you're going to be in good shape. All right. So price is at our green support line. So we would have 2 points, right? We'd have 2 points, one for the green arrow. We don't get one for currency strength because the JPY is stronger than the US dollar. We don't get one for being at a Bollinger Band because it's not at a Bollinger Band, but we do get one for being at a green support line. So currently we have 2 points on this trade. Okay. The next thing that we want to look at is, do we have a B on the stochastic indicator? What is the stochastic indicator? That's this right here in between this green line and this red line. Okay. You'll see every now and then we'll get a green B. Every now and then we'll get a red S. Every now and then we'll get another green B, another red S, another green B, another green B. Currently underneath this candle, which is where current price is at, we don't have a B, nor do we have an S. Okay. So we would not get a point for that. Okay. We would not have a point for the B on the stochastic indicator because it's not there. So we still only have a 2-point trade. Okay. 0.6 or 0.5 and 0.6, or sorry, 6 and 7 is going to be the cross up through the green line on the stochastic. This first black line is the stochastic. The second one is the RSI, right? Do we have price below and crossing up through this green line? We have it below. Okay. We do have it below, which is a great indicator. What it being below this green line means is that price is currently oversold. Price is currently oversold, meaning it's going to get bought, right? Because as you know, in the market, when things go high, you sell. When things come low, you buy. When you buy them at the bottom, that makes the market go up because more people are in that commodity, in that index to make it go up, right? So what we see here is it's through this green line, right? Through this green line, which is going to give us a 3rd point. It's going to give us a 3rd point because we know that it's not going to stay below this green line. It's going to come back up. Okay. So we've got the green line going through the stochastic, and we've got the green line. It's a 7 point, the green line or the black line, sorry, going through the RSI. Has price come through this RSI? It has. So we have 1 point for the arrow, green arrow for a call. We have 1 point for touching a green support line, right? Which is broken through now. And then we have 1 point for stochastic, 1 point for RSI. 4-point trade. Guess what? Cashtrap is calling out a 4-point trade. Okay. So even if you're not hearing anything I say, which hopefully you are, even if you're not hearing anything I say, all you have to do is look at the score. All you have to do is look at the score. But I don't want you to become so dependent on the score that you get into a trade and have no idea why you took a trade. Because the whole point of Sunday nights, the whole point of this session is for you guys to begin to learn to become independent traders. Learn to become independent traders to a point where you don't need an educator to tell you what trade to take. You don't need Diego or myself or a friend or anybody to tell you when to take a trade. You're confident because you know when to take a trade and why you took that trade, right? You need to know the why. Why is this a 4-point trade? Right? Those are the questions that you have to begin to ask and answer for yourself. Okay. So those were the 7 points for a call. Okay. Those were the 7 points for a call. We're going to jump into the 7 points for a put. The 7 points for a put, which are very, very similar to a call, but opposite. And I'll explain what that means now. So let's look for one that's giving us a put. NZD USD is currently giving us a put. Great. So what we're looking for here, guys, with the put, all the same points, but when we're looking for a call, we're looking for all those points to meet us at the bottom, right? We're looking for all those points to meet us at the bottom. When we're looking for a put, we're looking for all those points to meet us at the top. Okay. What does that mean? The first thing we're looking for, guys, is a red arrow. The very first thing we're looking for is a red arrow. Okay. Do we have a red arrow? Yes, we currently have a red arrow on NZD USD. What does that mean? We have 1 point trade. Okay. Currency strength meter for our second point is the US dollar stronger than the New Zealand dollar? In this case, it's not, right? Because NZD is sitting at 48, right? The US dollar is only sitting at 34. So in this given time, at this point in time, guys, we do not have currency strength in our favor. So we still only have a 1 point put. Okay. Is price at a red Bollinger Band? Price is in fact at a red Bollinger Band, right? We saw that right here in this previous candle, price came outside the Bollinger Band, came right back in. Okay. It looks like price is potentially going to come outside that Bollinger Band again and could potentially come right back in. Okay. So we do have a second point for it coming up and hitting a Bollinger Band. Okay. The fourth point we're looking for, guys, again, is a resistance line. Is price at a red resistance line? The red resistance line we're wanting to see is this one up here. But guess what, guys? But guess what? You have a resistance line here. You got a resistance line here. You've got a resistance line here. You've got a resistance line here. You've got a resistance line here. Okay. And towards the end of this call, I'm going to help you guys, and Diego will be on here in a little bit as well. We're going to help you guys identify what is a strong resistance and support versus what is a weak resistance and support, right? I'll talk about that in a little bit, but for the purpose of learning the 7 points, we're just going to talk about just coming up and hitting a resistance. Okay. Right now it's not coming up to hit a resistance. So we would not give ourselves a 4th point for that. We still only have a 2 point trade. Okay. Do we have an S on the stochastic indicator? We do. We do currently have an S on the stochastic indicator, which gives us 3 points for a put on NZD USD. Okay. 3 points because we are showing a red S on the stochastic indicator. All right. Our 6th and 7th point that we're currently looking for, guys, is again a crossing in the red line on the stochastic and a crossing on the red line on the RSI. So earlier on the last pair, we were looking for it coming down below this green, right? For a call. For a put, we're looking for it to come up above the red, because what that's showing us is it's overbought. It's overbought. And remember, when things are overbought, you sell them and they begin to come back down. So if we know that NZD USD is currently overbought, what that's telling us is we need to sell it. We need to put in a put so it will come back down. Okay. So we do have, last candle, we had it above the red, right? Which would have given us our 4th point. And it's above the red again, which would have given us our 5th point. What do you see? A put score of 5. You see how Cashtrap is giving you the number by itself. But what I want you guys to understand is why it's giving it to you. Why is this a 5 point trade? Well, we have a red arrow for one. Okay. We don't have currency strength, so we can't get a point for that. We've got it outside the Bollinger Band. That's 2. We've got an S, right? We had an S. That was 3. We had it above the red. That was 4. We had it above the red. That was 5. Okay. Another point of resistance and support that I want to give you guys, another point to tell us, basically the 8th point, is this long, mostly straight line. This long, mostly straight line, which you will see on every single pair, right? If we go to USD CAD, we've got this long, straight, mostly straight line. Okay. I'll get to the color change in just a second, but let's go back here. On NZD USD, this long straight line is what we call the 200 EMA. The 200 EMA. Why is it called the 200? Because it's counting the last 200 candles. Okay. Each of these candles is 5 minutes, right? Each of these candles is 5 minutes long. 200 times 5. Do the math, right? Do the math, and that'll tell you the amount of time that it's analyzing for this being the average price. EMA stands for estimated moving average. This is the estimated moving average of price of the New Zealand dollar to the US dollar over the last 200 candles. Okay. If price is above, hear me out. If price is above the 200 EMA, that is our 8th point of confirmation for a call. If price is above the 200 EMA, that is our 8th point of confirmation for a call. If price is below the 200 EMA, if price is below the 200 EMA, that is our 8th point of confirmation for a put. Okay. If you're a little bit confused about the EMA, just look at the color, right? Is it above or below? If it's green, I want you guys to type in the chat. If it's green, what direction are we looking at? If it's green, up or down? Type it in the chat. Up, exactly. When you guys see green, up, call. When you see green, up, call. The EMA is currently green, right? That means we are looking for it to go up, call. All right. Now, looking at USD CAD, do you see how right here it's red? Came right here, it's green. Came right here, it's red. It's changing colors on us, right? That's because Cashtrap is doing us a favor. Cashtrap's doing us a favor. It's color coordinated for us. Whenever price is above the 200 EMA, it's going to remain green. As soon as price comes below the 200 EMA, it's going to turn red. Do you guys see that? As soon as price comes below the 200 EMA, the EMA turns red, meaning you're looking to take puts because that's the 8th point of confirmation. As soon as that price comes above the 200 EMA, it's turning green because it's telling you to take calls because that's our 8th point of confirmation for price to continue to go up. Okay. Guys, I know for some of you, this may sound gibberish. Okay. For some of you, this may be exactly what you needed. Okay. I don't want you to get discouraged if this doesn't make sense to you, because at the end of this call, we're going to leave it open for questions for you guys to ask, right? I don't want you to be discouraged, but I do want you to be encouraged of it's really as easy as 7 points. It's really that easy. If I can be totally honest with you guys, the hardest part about trading is the discipline. The hardest part about trading is the discipline. The easiest part about trading is looking at a chart, seeing you have a call score of 3, knowing why you've got these three score, and taking a trade. That's the easy part. I promise you that's the easy part. The hard part is knowing how to manage your risk and be disciplined. And that's what we're going to get into in just a second. Okay. Now, I told you guys a couple minutes ago about strong support and resistance and weak support and resistance. What do I mean by strong support and resistance and weak support and resistance? Here's what I mean. Whenever you get a just one-off line of resistance or support, that's typically a weaker support or resistance. If it's just a one-time line, how do we know if we've got a strong support or resistance? Look right here. Let's look right here for a minute. Do you see how price came to right here and got rejected, and it came to right here again and got rejected, and it came really, really close to right here and got rejected, all within the same range? And then price came down to here and got rejected. That's what we would call this area right here, guys. I'm going to go ahead and draw for us. Let's see, where's the rectangle? I'm going to go ahead and draw for us, guys, because this area right here is what we would call a strong zone. Okay. This is a very strong zone. Okay. Why? Because not only do we have resistances, we have supports, right? Past resistances become new supports. Past resistances become new supports. Past supports become new resistances. What does that mean? Whenever the market is going up and down and up and down and up and down and going in a trend, right? Let me find a pair that has a good example of this for us. Let's go to 30. Okay, here we go. What am I talking about previous supports become new resistances and previous resistances become support. What I mean is this, is if we can look at, let's just say this zone right here. Why am I looking at this zone? Because I've got a bottom of a candle here, top of a candle, top of a candle. So for me, this seems like a pretty good zone, right? So I'm going to go ahead and mark it, right? Now, what I know is that price came down to this area, okay? Price also came down to this area, okay? What I would be looking for is, notice price came down to this area, okay? Price came down to this area. Look way over here. Look what happened right here. Because of this old support, right? We see a previous support right here. Previous support. Came down, hit it again right here. Came down, hit it again right here. Finally broke through it, okay? Finally broke through it, came above it, stayed above it, and then came down through it again. Look right here. Look right here. You see where I marked this blue line, which was a previous support over here? This blue line now became a resistance. It hit it right here once, hit it right here twice, hit it right here 3 times, almost hit it right here a 4th time, hit it right here a 5th time. Do you guys see that? That's what we would call a strong area of support and resistance, guys, as opposed to a one-off line of, like we saw earlier, right? Coming over here and thinking, oh, you know, it's got a new high. That must be a really strong resistance area. It could be, but it doesn't mean it has to be, right? Where we know of strong resistance and supports being is previous supports and previous resistances. That's what I want you guys to be thinking about, right? When Diego and I hop on a call, we get on 10, 15 minutes beforehand and we start marking our charts of previous supports and previous resistance. Why? So once we get on the call, we already have lines on the screen, right? We already know what we're waiting on. And once price gets to that area, we're very confident that it's going to get rejected in that area. Thank you for watching Cashtrap 3.0 training. If you enjoyed or liked this video, be sure to click the thumbs up right underneath this video and subscribe by clicking the red button on the screen for more information on our channel and when we'll be posting our next video. We'll catch you guys soon.